What is good, guys? It's Rey-Jay back with another video, and in this one we're going to be talking about the SPY, the Nasdaq, the QQQ, and the futures. Break down what the charts are telling us, what the technicals are showing us, and what actually happened today with Jerome Powell. I'm also going to talk about why tomorrow is going to be another big day because Jerome Powell is going to be speaking again. So if you thought today was crazy, we're likely going to get a repeat of this as Powell will be speaking in front of the U.S. House. Now, before I break anything down about Jerome Powell, what he just said, why the market is performing the way it is, and what I do anticipate to happen in the future, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free AMC share, a free Tesla share, or a mix of all of them. It's a limited time offer. The offer ends in just 3 weeks. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So SPY is down 1.4% at the time I'm recording this. I'm actually recording this during power hour. I have to record this a little bit earlier than usual because I'm busy today, but I want to actually talk about what's going on right now. Why is the market selling off? What are the technicals telling us? Well, to start us off, Jerome Powell was speaking in front of the U.S. Senate, and he did say some very hawkish things. Now, he was being questioned by the Senate, okay? He couldn't just back away from questions and just run away. He had to answer them, and he said some very important things. Firstly, he said the Fed is going to continue to raise rates. They're likely going to end up raising the terminal rate higher than expected. So he's telling us the Fed is most likely going to be more on the hawkish side. He also said that there is going to be more tightening because inflation is still hot and it's nowhere near their 2% target. He also mentioned that they have a lot of work to be doing involving the whole situation. They're nowhere near done. And all the nonsense about the pause coming soon is just nonsense because we don't need to talk about the pause or focus on it. There's more tightening that is needed. Powell also implicitly stated that the US may be entering a recession very soon. He said it's possible. He said it's very, very probable. He didn't guarantee it, though, and he did implicitly state this because he said that there could be a lot more unemployment than expected. He actually said it, and he also mentioned that the road is going to be bumpy. So he changed his tonality, his words. He used to say, oh, it's going to be a soft landing. It's going to be, we're going to have transitory inflation. Everything just changed, especially because he really has egg on his face for saying disinflation, disinflation, and then right after the inflationary data was hot. So, once again, he had to be more hawkish. The market didn't like it. The market is starting to actually price in a 50 basis point rate hike for the March 22nd meeting. And also, we could get another hot CPI report once again. That's also very, very possible in just 1 week. So for tomorrow, okay, just remember today, Powell was speaking in front of the Senate. Tomorrow, Powell is going to be speaking in front of the House. So he's going to be talking to more outspoken people in the US House. I'm sure they're going to be hammering the guy with question after question after question. It's going to be madness. Now, on top of that, I want to note that Powell will most likely be hawkish again tomorrow, so we could see the market get smacked down a little bit more. However, it is not necessarily the end of the world because I did prepare you guys for this yesterday, and on top of that, something else is developing in the charts. I just want to note to everyone that we do have relatively low put-to-call ratios for today, also for tomorrow, but going into Thursday and Friday, or by Friday, we do have a higher one over 2.08. Right? This tells me the market makers, once again, they might play a game. They might try to prop the markets up by Friday. There's a chance they might try it. I'm not guaranteeing it, but they might try to hurt shorts. They are incentivized to do it. So here's what I'm essentially saying. The Fed has to tighten, okay? The Fed has to continue to raise rates. The best strategy, at least in my opinion, and I'm not giving you guys financial advice when I say this, but is shorting the market is not necessarily a bad idea in my opinion. At least that's what I've been doing. And I've been shorting it since we were way up here. A lot of people that shorted it up here are probably green. But here's the thing. We might actually see a bounce. We might actually see a bounce soon. And if we do get the bounce, this could be another shorting opportunity because ultimately the market's going to come down. If we don't get a bounce, if there's no bounce, like not tomorrow, but like later this week, if there's no bounce whatsoever, then you're also going to be making bank because you have short positions, right? So shorting long term seems like a win-win in my opinion because we're likely going to see more downside, but I don't want to solely focus on the longer term because for the short term, the market might get a bounce for the super short term. And the reason I say that is because we're on the verge of forming a divergence on the RSI again. Look at how the RSI, so hold on, right in this zone right here where my cursor is, the RSI was at 38, 39, let's see, 39, 38, 37, 42, maybe 37. We got actually, I think, at 36, all the way to 36. But mainly like right here at this bottom, we were in like the 38, I would say like 40 to 36 zone. We're currently at about 39 right now. We're at 39. We're very close to the same level the RSI was at back when this thing was in the low 390s, and we're currently at 398. This tells me that if the market crashes again, and tomorrow, let's just say we drop, which I think we will drop a little more tomorrow, but if we do drop pretty hard tomorrow again into the mid 390s, what's going to happen is the RSI might just drop even lower into like the 34s, the 35s, 33. But then the RSI was at, 37, 38 when we were at 392. What I'm trying to say is the stock market might make a higher low than this low, but the RSI might make a lower low, telling me that we could be forming a bullish divergence. That is a possibility. And what that might imply is maybe the market tanks more tomorrow. I do believe the market has more room to come down because Powell is going to be speaking once again. He's going to be interrogated by the US House, and they're going to hammer him with the questions over and over again. But once again, when you look at the options chain, we have 2.08 as the put to call ratio for Friday. All right. For Friday. And also, we have quadruple witching with a high put to call ratio for next Friday, the Friday after this one. This tells me there's a chance the market makers might not let the market crash yet. They might try to help the market bounce. They might try to prompt the market up artificially later this week just to cause pain for the shorts, to cause a mini short squeeze, and so that they don't have to pay out all these premiums. There's a chance they'll try it again. That's what's been happening over the last couple of weeks. So I'm not promising it though, because right now the data does not support a bounce. Like right now, the market looks pretty bearish. We got some very bearish news. So here's what I was trying to say in the beginning, and that is if you have long-term short positions, you don't have to worry too much if we bounce or not, because ultimately we are going to come down. But if we do end up bouncing, right, you could also re-enter short positions because I don't see the bounce being too big. Even if it is artificial or temporary and lasts like a week or two of them just holding us up and we just trade sideways, it doesn't matter to me because we're likely going to see a continuation to the downside anyways. So that's basically what I'm seeing for tomorrow, okay? We might see the market drop more with Powell, maybe to the mid 390s, 393 could even come. But if we do come all the way down to these lows or very close to them, the RSI is likely going to be very oversold, like super, super oversold because we drop super, super fast. That would tell me that we could form a bullish divergence and see a counter trend rally again as we approach Friday. And the market might continue to trade sideways like this for a while, where we drop hard, then we bounce up, and we, back and forth like that. For another week to week and a half, there's a chance this could continue because of the options chain, because of quadruple witching, and because of the manipulation in the markets. But you don't have to worry too much about that. Because if you were shorting way up here, or if you have like long-term short positions for like April, for example, in my opinion, once again, I'm not giving financial advice, but in my opinion, those will end up printing. You will make money off of those, in my opinion, because let's just say the market fluctuates back and forth or not. Ultimately, I see the market coming down. I see SPY breaking below 390 into the 380s and lower. Whether it takes like 1 week or within the next 2 weeks, I see that eventually coming. All right, so I want to make that as clear as possible. Once again, for tomorrow, I'm seeing the market coming down, maybe trying to bounce off the mid 390 level, maybe around 393 to 395, somewhere around there. And then just be ready for Powell as he will be speaking tomorrow. For Tesla, Let's see what Tesla's telling us. As far as Tesla goes, I'm not seeing a divergence forming right now. In fact, we're not really getting it. The RSI is heavily correlated with the price action right now, but Tesla is still trying to hold this demand zone around this 186 level. If 186 fails on Tesla, expect it to come all the way down to 182 to 180. That's where the gap fill is. But if Tesla holds this and tries to bounce, it could try to fight for the 50 EMA around that 196 level if it does get a bounce, and it could slowly uptrend from there. The odds favor that tomorrow Tesla's going to see more downside. It might even come a little below 186 because of Powell. Then we might be looking for a bounce around there. Maybe with the overall market, it's very possible. For the QQQ, I'm seeing the triple Q at about 196-ish at the time I'm recording this. RSI is at 49. We're not getting the same level of RSI because the RSI was actually around 35 at the lowest. So we're not getting the same divergence just yet, but the QQQ is holding up pretty well. It didn't actually drop that hard. I'm seeing the QQQ potentially coming down a little bit more, maybe to fill this gap all the way down to 293 or so. Maybe tomorrow the QQQ is going to drop, and then we're going to get a bounce maybe around there, maybe around this 290 area to 293, somewhere here. It's going to try to bounce temporarily. And if it does bounce, once again, this could be because of manipulation, because they're going to try to, bring it down to cause pain for shorts. They're going to try to, bring the market up to cause pain for shorts. Once again, maybe by Friday that happens. If that's the case, it is what it is. But overall, guys, I'm still more bearish for the longer term of the markets. All right. So for tomorrow, watch 293 to 290. As Powell's going to be speaking, there's likely more downside to come. For NEO, she broke below $9. The next main level is going to be 8.76, then 8.3. I could see her enter that zone very soon. If that happens, be on the lookout. For NVIDIA, I'm essentially seeing, I did tell you guys that I was a little bit more bearish on this. It's actually down about 0.93% at the time I'm recording this. The next major level on this thing that I'm going to be watching is around this. We have some major support. I'm seeing around this 224 to 226 area. There's a demand zone right there. So it might try to come all the way down to the 224s later on. But before that happens, I'm going to be watching this 231 zone between 230 and 231 because that's where we also have some relatively strong support. So I see NVIDIA coming down all the way to the low 230s. Might try to bounce off of that temporarily. But once again, the ultimate destination is more to the downside later on, much later on, going into the next couple of weeks. The dollar is continuing to break out. This is bearish for the stock market. It is, breaking out really well. It might actually trade a little sideways as it has been breaking out pretty hard. We are kind of overbought right now because of the big drop in the markets. This is also telling us that inflation is likely going to continue to go up. The VIX, once again, got propped up thanks to SPY. It's going to likely continue to actually trade in the zone between the 19 and the 19.7. It could just trade a little sideways, maybe push up a little more, maybe try to get to the 20s or so, then trade sideways from there if we do get a counter trend bounce. But ultimately, for the longer term, I'm very bullish on the VIX because of how the market's likely going to perform. And I do see the VIX potentially breaking out. In my previous video, I told you we might see the VIX bounce either off 18 or this upper trend line. Instead, we did it at about 18.16. Once again, we're continuing to go. I could see this thing get very close to 20 by tomorrow. Maybe reject off of it, trade a little sideways for some time. But then later on, by like next week or within like 2 to 3 weeks, I see this thing continuing to rocket. Once again, bearish for the stock market. For what else do we have? We have Microsoft. Microsoft, in my opinion, let's see what this thing is doing. What I'm essentially seeing is Microsoft has a target of around 250 flat. And if that doesn't hold, well, we have this gap right here. We're going to likely try to fill the gap at 251, then 250 could come. We might try to bounce between there and about 247. That's where we actually have the 0.5 retracement. Between 247 and 250, this thing's like going to try to bounce. We do have some nice support there, so I do think it might try to bounce around there after filling the gap. But then after that, once again, guys, I'm not counting on it being a very big bounce. I think the market's just not in the best of states, and people are being very apprehensive. For Apple, I told you Apple would likely fill this gap. We're very close to doing it. I think we've already done it. Apple might come all the way down to retest 150 to 149.6. If it fails below that, there's another gap all the way down in the mid 140s. So it could actually come all the way down there if 150 doesn't hold between 150 and 149.6, which is the 0.236 retracement. If that doesn't hold, Apple's going to come down even more. We might see Apple come down a little bit more thanks to Jerome Powell once again. But once again, not the end of the world, because in the market, anything could really happen, especially in the end of the week if the market makers artificially pump the markets. So what I'm essentially seeing, also the 10-year treasury yield is pretty flat right now. It's going to likely continue to uptrend once it breaks this 40 resistance. And we do have the gap up here on 40.66. So a lot of signs are pointing in the direction that the market might see more downside before a possible bounce, depending on how things really develop. But I just want to make this as clear for everyone. Once again, I'm still watching the charts very carefully. As far as the market is looking, I do see more downside tomorrow, like I said. Powell is likely going to cause more downside tomorrow thanks to his interrogation, but we're going to be looking for a possible bounce on SPY and for the markets, possibly by the time it gets like Wednesday, Thursday, and maybe Friday, thanks to the options chain. It's a possibility, but I'm not 100% confident about that because the news is quite bearish. And if the bounce comes, for me personally, I'm not necessarily going to become too excited. I'm not going to fall for the euphoria. Instead, I'm going to continue to short long term. And I do believe that for the long term, it will work out, especially as we get into April, going into May. I do believe there's more downside in this market. With that said, thank you all so much for listening. I'm not giving any financial advice, by the way. I know I did talk about some potential plays. I'm not telling you to do that. I'm simply talking about what I've been doing and how it's been working. And I just want the best for everyone. All right. So nothing I said is financial advice. Thank you all so much for listening. Have an absolutely incredible end of the day. And I'll see you guys in the next one. The market to the moon because the long term future is still incredibly bright. And peace out.